Hello and welcome to our technical analysis session, the Daily Nifty Insights with MJ. Let's study, explore, and understand the current stock market with the help of performance of Nifty. Today is 22nd May 2020, and we will be estimating the probable moves, resistance, and support levels, and the new emerging trend in Nifty for the next trading day on 26th May. Yes, 25th May, Monday, is a trading holiday on account of Eid. The market on Friday opened with a negative bias, taking the cues from global market, and it became volatile during the press conference of RBI, which was scheduled at 10 a.m. RBI reduced the repo rate and reverse repo by 40 basic points, which was the welcome move, but it was already discounted in the market. As soon as the RBI Governor, Mr. Shaktikanta Das, announced the 3-month-long moratorium, rather the extension of the moratorium on bank loans, the banking stock started free fall, taking the bank Nifty down by almost 3%. Most of the day, market consolidated after 11 a.m. The market breadth remained neutral, with 24 stocks advancing and 26 declining from the stack of Nifty 50. We had expected the market to remain in a range and in a consolidation based upon the data and sentiments of the participants available from the previous day. The Nifty, of course, consolidated in the range of 8,900 and 9,200 as estimated for consolidation. You can see the daily Nifty chart on my screen. On Friday, Nifty opened at 9067.9 with an opening loss of almost 38 points. It rose to 9,149.6. However, that rise could not sustain there for a long and closed at 9039.25 with some recovery, but yet with a loss of 67 points. Let's see what kind of scenario is emerging from the chart. The trend in Nifty at present is a sideways and consolidation within a range, right? Nifty is moving in a down channel or descending channel, taking support at the lower trend line of the ascending channel. And also Nifty had broken down from the rising wedge, which was a negative pattern, as well as it has broken down from the neckline of head and shoulder. But for some or other reason, it's taking a support in this particular range from 8,800 to 9,200. On Friday, it has made lower low and lower high as well. On Thursday, we had mentioned that Nifty has formed a shooting star kind of pattern, which is bearish in nature. And on Friday, market became bearish. But on Friday, it made a evening star kind of pattern, which again is a bearish pattern. So we need to look at how it plays on Tuesday when the markets open. Now let's see how the resistance and support levels are emerging from price action and Fibonacci perspective. So if the market goes downside, the first level of support is available at 8,968. That's the day's low of 22nd May. And if that level is broken, although the same level is almost supported by the trend line as well, but if that level is broken, you will see the Nifty taking support at 8875. That's the second line of support for Nifty. And if 8875 is broken, then 8807 is the strong support level for Nifty. Of course, there are few levels downside at 8756 and 8700. So there are 4 or 5 layers of support levels which are available to Nifty on the downside. And on the upper side, if Nifty starts becoming bullish on Tuesday, the first level of resistance it has got at 9068. That's the opening price of 22nd May. And if that level is broken, you will see the next level of resistance coming up at 9103 level. That is the closing level of 21st May. And if that level is also broken, we will get third level of resistance at 9150, right? And that's the 22nd May's highest point, right? And also it's worth observing that from 9150 to 9178 is a distribution zone which has been there in existence for almost last 6-7 trading days. Started playing from the 15th May, and yet Nifty has not been able to break this distribution zone decisively, right? And if it breaks on Tuesday, then the next level of support is resistance is at 9213, which will be very strong resistance level, and we don't expect a market to go beyond that unless until there is something drastic happening in the market. So that's from the resistance and support level from the price action perspective. Let's find out how the option chain data is built up, right? Which option chain data we are referring to? We are referring to option chain data expiring on 28th May, right? And on the right hand side, you can see the built up of the puts, and on the left hand side, you can see the built up of calls. And let's find out support and resistance levels with the help of the open interest built up. And let's also see what kind of direction is coming out of here, right? So on the put side, we look at the maximum built up to search for the support level. So although there is a wide range of strike where the put writing has happened, but the maximum open interest is still at 9,000 strike, right? And that sounds to be a very strong support level. If this support level is, although at this level there is a unwinding of puts, but it's very little unwinding. The next level of support you can see at 8,900 level, where you can see almost new open interest of 2.9 lakhs has come up. And if this level is also broken, the third level of support you could see at 8,800 level, where freshly 6 lakh contracts are opened up. And overall open interest is also more than 2 million. That's a very strong support level. At this point of time, we are not looking, the Nifty may go below on Tuesday, but if at all it moves downside, you have got the 8,700 level, where you got 1.2 million contracts overall built up, but not much of fresh open interest has built up. And below that also at 8,600, a good built up is there. 8,500 also good built up. If you see even at this level of 8,000, there is a good built up. On the call side, let's see how do we see the resistance levels building up. So the first level of resistance is building up at 9,000, and at 9,000 we've seen almost 5.5 lakh new contracts coming up. So new calls have been sold, and overall 1.6 million contracts. So this is emerging as a strong resistance level. And a little above than that, we see almost at all the levels, a fresh call writing has happened. Not too much, but then still there is a 1.2 lakh contracts, and overall built up is 1.2 million here. So this is also very strong resistance level. The next strong resistance level is at 9,200, where you can see 1.26 lakh fresh contracts have been written. 9,300 is also a very strong resistance level, where overall built up is almost 1.9 million. And almost at all higher levels, you could see a lot of call writing has happened, even at 10,000 level, right? So although at these levels where the premiums have become now peanuts, will not be considering that the call writers are active either on the call side or on the put side, right? But such a huge range of puts and calls, it represents that well, there is still volatility in the market, and not a very good sign, right? And especially when India VIX is still high at 32. So high volatility in market does not provide you the stability. So that's a fear factor playing in the market. From the put and call built up, you can see that 8,800 to 9,200 or 9,250 could emerge as a trading range for Tuesday at this point of time. We do not know how the international market will be reacting on Monday, but looking at the kind of negative news flow on US-China trade war, or now a new war has opened up. That's a delisting of Chinese companies in US, and China is threatening that it will also do a retaliatory action. So that may further create new dynamics. Otherwise, in my view, the market would be consolidating in 8,800 to 9,250 range. So that's on the option chain front. Now, let's look at what kind of data available on Friday, end of the day. So on Friday, FIIs had been net seller with a 1,354 crore rupees of sale in cash market, but unfortunately even DIIs were also net seller with a 344 crore rupees of sale on cash market. So they both had been bearish. The Nifty current PCR is at 1.05, which shows a neutral bias. Bank Nifty PCR for the current series is 0.55. That shows a very negative bias, right, for Bank Nifty. And overall, if we look at the participant wise, it's only retail clients are bullish. If you look at pros are bearish with a trading pressure of 0.76, and FIIs are also mildly bearish with a 0.86 of trading pressure, right? So that gives the idea about what could be the direction of the market. Based upon this data, I said the market on Tuesday may be again range bound with volatility and in consolidation mode. Hope that gives you the clarity, and this video is worth your time and efforts. Thank you very much for watching the video. To get more details on technical analysis, you can also read our daily report on our Facebook page. I trust you are getting benefited from our technical analysis. We provide quality information and excellent learning through the videos. To get latest information, please subscribe to our YouTube channel, which is by name Praj Academy. And don't forget to press the bell icon to get notification on our latest videos. To learn about stocks, derivatives, commodities, and Forex, you can request for videos on the subjects of your choice in the comment box. We would try to make the videos on your preferred subjects. Thank you for watching and liking our videos. Please share the video with your friends and family members who can also be benefited from quality knowledge and analysis. Thank you. Happy trading, happy investing.